Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Rimini Street CEO Seth Ravin to discuss how Rimini Street helps organizations right-size their business by reducing enterprise software support fees. It's great to have you with us. Welcome to Trade Talks.
Thank you very much.
Seth, tell us about Rimini Street and where you fit in the technology ecosystem.
So we're a provider of enterprise software support for large systems in the ERP space, such as Oracle and SAP, where we come in at a price of 50% of what the software vendors charge, and we don't require those expensive upgrades that have to take place all the time, allowing customers to run over 15 years without having to do a major upgrade. So that'll save customers up to 90% total operating costs, and we provide them better support during that time as well.
Any key metrics about Rimini Street you would like to share?
Well, we're nearly 15 years old. This is our anniversary this coming week. We've been public for 3 years. We have over a 60% gross margin, with nearly 100% of our revenue being recurring revenue, just like a SaaS business. And we've been growing at a CAGR of 27% since 2015 and GAAP profitable.
Who are some of your clients?
Some of our bigger clients that people would know, a lot of name brands such as Welch's on the food product side, T-Mobile on telecommunications, Hyundai Kia on global automotive, just samples of various industries that we support around the world.
Rimini Street recently reached a milestone and completed its first follow-on offering. Tell us about the milestone and what the offering means for the company.
Well, being public 3 years, we came to being public through a SPAC process. And as you know, part of a SPAC process means you bypass the normal marketing that happens with an IPO. And that often limits the number of investors that you have early on in the stock. So we wanted to go out and broaden the base of investors. And we did that successfully with our follow-on offering, where it was almost a re-IPO in many ways, where a lot of investors were introduced for the first time to Rimini Street through the process. So it was a very successful offering, and we look forward to our bigger, larger investor base now trading the stock.
How were you impacted by the COVID-19 pandemic, and what did the company do to support its employees and customers?
Well, we luckily were fairly immune from COVID in the sense that we were already servicing our clients 100% remotely. So we just changed a few of our processes. We moved people from our offices globally to home offices. We already had 50% of our workforce working remotely. So this was not a huge change for us and not disruptive from the business. For our customers, there are many customers who are feeling additional financial challenges. They're trying to save jobs, stabilize their businesses, and we can help in that process by contributing back in the IT side, reducing budget and allowing them to spend the money on items that drive more competitive advantage and growth.
Seth, you mentioned earlier that you've saved clients up to 90% of some of these costs. How much have you actually saved clients to date?
We estimate that we've now saved clients nearly $5 billion in the course of the first 15 years. And this is substantial. This is money that's been reinvested back in their business to drive that competitive advantage and growth.
You mentioned that Rimini Street helps many organizations right-size their business by reducing enterprise software support fees, which many companies were forced to reduce costs during COVID-19. Will that trend continue on the other side of the pandemic with enterprise software companies outsourcing support?
Well, I think as we've seen with our growth of the 27% CAGR, even during the economic expansion, there is always room to reallocate costs in a better way and more efficiently for companies. So from that perspective, although COVID presents some additional accretive opportunities for Rimini Street, while companies have special challenges around cost and money and budget and cash flow, we've seen this trend continue, and we've guided to accelerated growth even for 2020 before COVID. So we would expect to see continued accelerating growth even after, let's say, the next year when the COVID situation resolves itself.
As companies cut costs during this pandemic, which sectors stand to benefit most from Rimini Street services?
Well, we're very big across all sectors. So whether it's banking, insurance, government, financial services, retail, as you can imagine, our areas of hospitality, such as our cruise lines, our airlines, anyone who's involved in travel is suffering terribly right now, and we're helping them. But we're also seeing it in retail, where, of course, the change to online has been dramatic for customers as well as the retailers in the market. So these areas, I think, are undergoing structural changes that were already underway before COVID, accelerated through COVID. So all of these various businesses can benefit from Rimini Street today, and they'll benefit from us even after the pandemic passes. So we see ourselves as being across almost every industry out there today.
All right, Seth, congratulations on the 15th anniversary. Thanks so much for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.